year over year. That was for December, according to the release on Canada's Consumer Price Index. Our guest says it'll be hard to find a reprieve from those higher gasoline prices as the loonie continues slumping. For more, we're joined by Roger McKnight, Senior Analyst at Enpro International. Always great to see you.
Good to see you too.
I mean, if I could summarize two really interesting points that you've been making to us. We're seeing lower gasoline prices in the States because they've got so much more domestic supply. Canada's not feeling the same magic because the loonie is falling. But also this propane supply crunch in the States could get pretty serious.
Yeah, there are two drivers during the season, during the year. In the winter season, it's the distillate inventories and prices that tend to drag gasoline by a slipstream, either up or pull them down. The opposite happens in the driving season. So what's happening now is that you got the distillate inventories below the 5-year average. We just saw a drop last week at 4.6 million. That's going to put a lot of pressure on distillate prices, and you're going to have gasoline prices gradually creep up as well.
Right. So in Canada, we would normally hope, when U.S. gasoline prices go down, we would normally hope to see lower Canadian gasoline prices.
That's right. But if you look at the price of crude versus a year ago, it's almost exactly the same.
Right.
The difference is the loonie is at 89 versus last year when it was 99.
Yeah.
So we got a 10% difference there that the consumer has to pay because all crude is paid for in U.S. dollars.
Tell us about the diesel. I mean, diesel has been going up in Canada, driven by higher coal prices.
That's right, but it's not that what we call the rack prices is not that much different. But the margin is significantly different. It's up about 4 cents when it was last year. But these distillate inventories are getting very, very scary indeed, and the propane is probably going to piggyback along with that as well, because propane and butane are byproducts of the refining industry. And if we start seeing refineries gearing down for the coming driving season, which we are seeing already, they dropped 6% in the last 3 weeks, then that's going to put a real strain on distillate inventories, because the reason they're switching over is to make gasoline for the driving season. This happens 10 of the last 11 years. Gasoline prices start to move up at the end of February into later part of March.
But the side effect of that is that they'll be producing less stuff like propane.
Exactly.
At precisely the wrong time when we got these crunches going on.
This is a very, very difficult situation we've got into here with refineries trying to balance, get the heating oil or distillates moving, but at the same time they have to retweak to take a different type of crude to make a higher yield of gasoline for the driving season. So the consumer's going to get it in the ear one way or the other.
Could we actually see a situation where people can't get propane to heat their homes, and industry and farmers can't get the stuff?
Yes, and that's not the fault of the distributor. A distributor distributes; it doesn't manufacture. So you've really got to watch it's a refining situation, and if we have unplanned outages, such as we had at the Federated Co-op out in Regina, that puts pressure on propane in the West.
So this could affect Canada as well.
Oh, absolutely. Right now, they're down 22%. Inventories down 22% in Canada and 58% in the U.S.
Let's talk about this issue of U.S. oil. The U.S. oil industry is mad keen to start exporting crude. You reckon this is a huge dilemma for President Obama?
Yeah, he's between a rock and a hard place yet again, piling on top of the XL situation. But there are two different viewpoints on exporting crude oil. First of all, the producers of crude, shale oil especially, would like to export it because they can get a good price for it in Europe. But the ones the refiners don't necessarily want that at all. So
they want the cheap feedstock.
Yeah, they want the cheap feedstock, and the oil companies want to export the crude, because right now we've opened the bottleneck at Cushing. We've really moved the Cushing bottleneck to the Gulf Coast refineries. I can't believe they can run much harder than they are. So there's going to come a point in time when they can't take any more crude unless it's exported. And if they can't take any more crude, that drives the price of shale oil down, back in crude, and then the investors will start saying, the oil companies start saying, our return on investment is getting to zip. We're going to shut her down. There go the jobs. Hello, Mr. Obama, what are you going to do about it?
Oh, that's going to be tough, isn't it? He doesn't want higher oil price, gasoline price, but he doesn't want those jobs to be lost either.
Not midterm, November. He won't make any decision on either the XL or the export of crude oil till after the midterms.
And of course, we should point out that a lot of the U.S. refineries are geared up to take the heavy oil. They thought they'd get it from Venezuela, Mexico, wherever, but this back-end oil is light oil. They can't use it sometimes.
The refining industry on the Gulf is very, very flexible, most flexible in the world, but you're right, they were gearing for the Western Canadian Select or the oil sands crude.
What about your thought about Canada getting the stuff out, getting the oil out? Goldman, of course, well, warning us last year, unless XL or this Alberta Clipper move ahead, Canadian oil is going to be trapped.
I think we're talking about the West. I think West-East is more probable. Energy is more probable than the Northern Gateway, even though it has been approved theoretically. But with 209 conditions, that's a lot of conditions.
Roger, always great talking to you. Thanks very much.
Great to be here.
Roger McKnight, Senior Analyst at Enpro International.